for a chance to win a free lifetime VIP membership and see every trade that we take inside of the VIP group. So there you go. 2 steps. Join the Telegram, enter your email and name into for the giveaway for a chance to win. We will email the winner next week. Okay. And there's the link in the chat for you in case you need it. Okay, guys, up next, Chris Pulver coming in hot, taking over the show and talking a little bit about this crazy market that we're seeing. Like I said, indices off a little bit here, down 1% for S&P. Nasdaq's down a little bit more than that. Russell took the Russell trade. We'll see how it goes. I've got to stop below today's spike low. If this gets taken out, we move on. I'll watch again for probably my next trade attempt would be on the Nasdaq, but I'll keep an eye on it. All those trades will be updated inside of our VIP group. Again, enter for a chance to win for free. Link is in the chat in the Telegram. All right, up next, Chris Pulver.
Hey everybody, thanks for tuning into today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show.
Whoa. Oh, hey, 30-second countdown. What's up, dude? Good morning, happy Friday. How we doing? So we finally have a bit of a sell-off. I did close out a hedge today. If you are in Pulver Alerts, I did a 590 by 580. That's an May 30th put. So 590 was the buy put, 580 was the sell put, paid 380 for it. And right now I closed it out for about 640 to 650 credit. So I'm going to update that one right here. This will be a quick reply on that message. Trade management. Closing the 590 by 580 bear put spread hedge for 650 credit. So entry was 380, closed 650 credit, taking the profit. Let me make sure everybody can see that. Okay, so that's in. Now, what I wanted to look at is I don't mind adding another trade here. If I did a, just a put at 278, if I do a, this actually isn't a bad position. If we're going to fall a little bit lower, if I did like a, 580, like this isn't bad for $100 of income. I have a profit trap here. If we struggle to go higher, I have about a $5 profit trap on top of the credit that I can pull in. This is a little bit better. This is a little bit better. Pull in some more income here in the next 69 days. Let me see if I can go maybe at the money. Let's try like this 75 by 70. So I think I'm going to take this trade. So I'm going to put this in for my margin accounts. It's a little income trade for 117 bucks. Let me go a little bit less here. 150. That's a little bit better. I'm going to try to take this trade for 150. 150. Okay, not filling at 150. Let's try a 140. Mid's 148. I think 145 will fill. 148 not filling. 147. All right, 147 just got filled. So I'm going to be in this trade. 9732. All right, I'll get this all filled up here. Nine one one one. Okay. So I want to make sure these aren't overlapping. So this would be a 575, 571, 485. This would be a 111. There we go. So I just have a naked put. All right. So I'm putting this trade in. I've got a couple more accounts I'd like to put this in on. Okay. So this trade here. Let's go. Got it. Okay. So here's what's happening. I'm in this trade. We got a bit of a bump in IV. So applied volatility has gone up. I looked at that as a better opportunity to sell some premium. And what I'm doing here is I'm looking at about $147 of income out to the end of July. And I have a profit trap. So if we're below, here's how this trade works. If we are below, so if we go, it's a 111 trade. So if price is greater than 575 by July, I'll just put 7/31 expiration. Keep the $1.47 credit. If price is less than 571 and still above 485 by the 7/31 expiration, keep the $1.47 and keep a $4 profit trap. Okay, so that's how this trade works. It's essentially, I'm basically selling a put on the SPY, but I'm putting in a profit trap as a potential bonus. So that does sacrifice a little bit of the profit, but it also it doesn't make the trade is like delta heavy because I have a bit of a bear trap there. So I mean, if we're higher, great. If we're lower, fine. I wouldn't take any assignment risk until price is below. The probability of profit is quite high. So we've got a 98% chance of profit on the onset. You know, volatility's jumped up a little bit. I don't think we're gonna have like crazy rips. If we have, I mean, look at what did the market respond to this morning? Trump was coming out screaming like we're gonna have a 50% tariff in Europe. Okay, I mean, what's the real tariff? 15%, 12%, 10%? Are there exemptions? It's like it's the same thing we saw before. I almost wonder if the market is going to take this a bit more in stride. Like this is a knee-jerk reaction, but the market's going to take this more in stride. It's like, okay, well, here's the knee-jerk reaction. What's the real deal, right? So anyway, we'll see how it plays out. But because we had a big jump, the IV was like 17, now it's 28. I'm going to take advantage of that a little bit by issuing this trade. So let me get this one issued and posted. And if you like the trade, take the trade. I'm in it. So this is SPY. So it's a 7/31 expiration. I'm buying the 575 put, selling the 571 put as a profit trap, and then selling the 485 put. So 147 credit. So 111 for income plus profit trap. All right, that trade's in. And I'll put this in Pulver alerts real quick. So this will be under my index trades positions. New trade, SPY, income and profit trap. So I'll build this out for you so you can see it. This is the hedge that I put on. So this is the one that I just closed out. We're trading around what's the price on SPY right now? 578. So 578 is right in here. So realistically, like this is now. Like we go to right now. That 578 is offering about $150 to $200 profit. If you wanted to sit on this over the weekend, I want you to see the difference of coming in, because we have a holiday weekend, so no markets on Monday. Come into Tuesday, look at Tuesday morning opening bell. I just want you to see the difference of how much time works in your favor. If you come into 9 a.m. Tuesday morning, 9:30 when opening bell happens, okay? If we're still trading around 578, which is current price, this trades up about $230. If we flush a little bit lower on the day, then let's say we're trading down to 575. Well, now you're up $300. So I mean, just time. I don't have to. I don't intend to hold this trade until Friday next week. I closed it out already for 650, which gives me a net profit of about $270. So initially the trade was $3.80 minus 650, 270. That's my profit on the trade. So I did that on 11 accounts. So that was a quick, almost $3,000 on some hedges. Okay, so that's the trade. Now I'm going to build this one out with you for a 111. So I have a put. I'm going to add in another put. This would be a sell put. Let's go out to July 31st. So this is going to be a buy put at 575, and then a sell put at 571, and then a sell put way down here at 485. There. Okay. So this is today. This is towards expiration, and this is the trade. Everybody see that? So this is the 111. That's where price is at right now. I do have a profit trap. So if price is below 575, all the way down here and staying above 485, that's my profit trap of $4 plus the $1.47 that I pulled in on income. Okay. So the nice thing is if price goes up from here, I just keep the $1.47. If price goes up, I keep the $1.47. If price is less than right here, so less than 571, which is going to be the peak of my profit trap, all the way back down here, but still stays greater than 485. I have the 147 credit plus the $4 profit trap, which gives me $547. Okay. So I like the trade. And when we have I did this a ton in March, in April. I did a lot of these trades. And from April to May, that little 30-day window, these were closing out for 90% max profit. The premiums were even better because the volatility is so high. But that's what enabled me to get back up to my watermark highs for the year, well before we had the little even before the U.S. China gap. I was still up to some fresh highs. So anyway, I'll take a screenshot of this. This is going in the Pulver alerts. Okay, so that's the trade there. So I'll type this in. So if price is greater than 575 by expiration, keep 147 credit. If price is less than 571 but greater than 485, this offers $1.47 credit and the $4 profit trap. There we go. Okay, so screenshots in, good. Spies in. Okay, let's do similar. I'm gonna look at something similar on the Qs. I'd like to see the Qs pull back just a tiny bit more, but let me see if the IV jumped up on the Qs, because I might do the same thing here. 28.1. I don't mind doing the same thing here. I don't have a ton of exposure on the QQQ. We have the same expiration out 69 days. So my lows are around $400, 402. So if I did let's say 505 by 501, another $4 trap here. And then I go down to the 400. This is only if it offers up a decent premium. So I'm getting less credit for that trade, right? I do a profit trap now for $4 and I put in basically a cash secured put at $400, I'm only getting 55 cents for the trade. Now that means that I can't necessarily put the Qs all the way back down below the lows like I can on the SPY. The SPY I can put it, at the lows. So if I tried the 405, I still, I'd have to like really bump this up to, to pull in income like I just did, I'd have to go 420, which is obviously a little bit higher than the lows. So Qs just don't line up the same way. And I'm okay like not taking the trade. Doesn't set up the same way. So all right, I like the trade in the SPY. We'll move on. Let's go currency strength this morning. Dollar weaker. Well, let's see if dollar weaker is heading up into my profit target on euro dollar. Still up about 145 pips. Let's go across the board. Aussie dollar. I really hate to buy this thing right now because it's such a high price. Yeah, I'm literally talking myself out of it as I'm about to talk myself into it. Because, like I said, the forex market is the last market that I want to say buy the high. It is the worst feeling in the world to buy the high. It is the worst feeling in the world to sell the low. The forex market is notorious for pullbacks and retracements and efficiencies and pivots and fibs. So I hope we get a pullback. If we don't, it's open space trading. I maybe don't get the trade that I want on Aussie dollar. Let's take a look at Aussie Swiss. I'm still waiting to see how this kind of bottom is forming. Let's go to CAD Swiss. Same thing, kind of looking how the bottom is forming. Euro Swiss, still a little bit messy. Same thing, how bottom is forming. Pound Swiss. If you're hanging on a pound Swiss, as we mentioned here, if you were long pound Swiss, this is what I said. If you buy pound Swiss, take it back to this pocket or this pocket. Those are great profit levels to be protecting. Okay. You had to buy this with the intention of, if I'm buying it here, I've got to be willing to buy it again a little bit lower and buy it again a little bit lower. But the probabilities we're probably still heading up to these levels. So this could be just another pause before we get a push higher. Another pause before we go higher, right? Once we get to 113, 114, I would be out of that with some profit. Okay, it still looks okay. It's still, a valid profit target. Also, you can take it all the way up to the highs if you want to at 115 with a trailing stop loss, but I wouldn't be setting, I wouldn't just be setting my profit target at 1500. I would take the profit in here, and hopefully be able to kind of average back into it. What else? New Zealand Swiss. New Zealand dollar, like I said, this one looked a little bit better if you bought the pullback around 58.60. I didn't. I was waiting to get a pullback in here. Didn't happen. New Zealand Swiss. Still waiting to see if this, has a push up into the 200 moving average. I'm still up some profit. Let's go dollar CAD. Dollar CAD, I'm not that interested. I'm sure some of you may be doing something on dollar CAD. We had this really nice topping pattern here. That was a beautiful swing trade. I would say that's where you got out of the dollar CAD. If you're in dollar CAD, that would have been the best trade. Is take that swing, stop loss above, and then a nice push down to 3,900 or lower. Now that this is like the second part of this trade, maybe we've got to trend back down towards like 32 or 3,300. I'm not chasing dollar CAD, but I will say that if we come back down to these lows and we have some inefficiencies here, then I'm probably going to buy some more at a really low price. Dollar Swiss still hasn't broken the lows yet, but watching, I really want to see if this one just kind of works its way on the right side of the trend line. Where's my bottoming formation here? And do we get back into this cluster? Okay, let's go yen crosses really quickly. Yen, not really that exciting right now. Not really that exciting. Yeah, I'm going to say it's kind of a nothing burger at the moment. Dollar yen is, because of the weaker dollar. Look, this is a key pattern to watch. It could be very noisy around the 140 handle. Okay. I wouldn't be terribly surprised if we come down to 140. Be on the lookout for a potential bear trap. Okay. We come down to the lows, we poke the lows, but we pop right back up and we still stay in a range. Just be on the lookout for that. Okay. If it breaks and goes lower, look, there's a 2,000 pip measurement here. I think we get back to 120. That's an amazing opportunity. It really is. But as long as we don't have a bear trap, as long as this market's making lower highs and lower lows, keep the pressure on this dollar yen. As long as we are lower than 140, keep the pressure on the dollar yen. But to me, this trade really isn't validated to the downside and confirmed unless we get below 140. Okay. But if you sold it up here in the 147, 148, I'd be break even and just celebrate this thing every single day. If it wants to hit 140, maybe trail a stop. If it breaks 140, we really could let loose. The downside, however, is I don't think breaking 140 is going to come with anything good in the stock market. I think if we break 140, we have more risk off trading, and there's probably some more pain ahead. So that's what I'm saying. A bear trap would make a little bit more sense. If we're still going to have equities be resilient, I say we bounce here and we probably head back up into this range. I think this is more of a range. So just if we have a bear trap, be on the lookout for that. If we break below it, then we just have a weaker dollar, which overall could help. And maybe it's moving flows into like Asia dollar / yen. Okay. All right. Covers a lot of currencies there. Let's go heat map for a moment. Let's go mags. Mags at 51. Let me see here, actually. I don't think the IV is going to be good enough on mags to take a trade. I think options are going to be kind of garbage. But if I went out to December and this low is 40 bucks, could I buy? I mean, that's not a bad trade. If I did a ratio spread here, I mean, I could own mags, which is the collective MAG7. It's an income trade. I could own mags at the April lows. I don't think that's terrible, but that also is like, are they all going to survive? I would think they would. It's like, I don't know. I guess it could be a lot of risk, but it's certainly a lot cheaper than like trading Apple and Amazon and Meta and Microsoft and Google and Tesla all separately, right? I mean, for a little $100 trade, if I owned it here, I could essentially own the MAG7 basket at the 2024 August low. We pulled back 30+% here. I mean, it's just funny how this looks a lot like the S&P. It's still a long shot from the highs. I mean, we've got another 14-15% to get to the highs on MAG7. Anyway, I don't think I'm going to take that trade right now, but I do want to keep an eye on it. I did a synthetic long when we hit these April lows. I did a synthetic long. I bought a call and sold a put at the same strike, and that thing ripped up about I don't know, like $7 or $8. So I took that profit. But now I'm just kind of waiting. This is a big island. Also, one thing that's really nice about the markets right now, take a look at this weekly candle. Okay. We're just kind of sitting right in the middle. If I keep talking more, I'm going to lose my voice. It's been on the cusp each day this week. Here's a weekly candle. Here's a weekly candle. So, we still have this potential gap fill. If you think about this market like a bit of a bungee cord, we jumped off the bridge. We got snapped all the way back up. I do wonder if there's just less and less momentum, right? Like maybe we don't break the lows, maybe we don't break the highs right away, but I'd like to see how this whole area behaves. Are we going to, just kind of hang out here with a bunch of chop? Is this market still going to justify going higher? I'd love to participate in some type of pullback to then get to all-time highs, but the flows are interesting. They really are. Like this market is so, I don't know. It's like if we fill that gap, it's like that could be all the market needs. I mean, the Fed is still holding strong, doing their thing. I mean, the talk I've been reading this week is that the Fed would be adjusting their inflation target from 2% to 3%, which hopefully would allow them to show like, hey, look, we are right. Instead of telling the world that we're looking at a 2% inflation target and yet we're 4 years above it, to finally say we're going to adjust our inflation target between 2 and 3%. Well, now they can start, making monetary policy decisions based on a goal that's achieved. So we'll see if that takes place, maybe this year. But at the same time, Republicans, I think it's in the Senate right now, but there's a tax bill, right? The big, beautiful tax bill that passed by the House. It was 215 to 214. It was like a 1 vote difference. So it did pass. Senate has a look at it. Senate does have a Republican majority, so it probably will pass. But it's also increasing the deficit. It's a tax for the wealthy. It's going to leave people uninsured in the U.S. Like it has its pros and cons, but I just think it goes right back into the same window of like we're going to spend money, we're going to increase the deficit, we're going to raise the debt ceiling. Um, I I don't know how firm, like I don't know how firm and contentious it is in D.C. Right? It's like right now Republicans have the majority. This is the window to do the most change. If they want something to pass, now's the time to do it. Because if there's enough disappointment, disenfranchisement, then they potentially swing the midterms, which is later this year in November, right? So time will tell. But anyway, we're kind of stuck right in the middle. We have a gap fill. So we're kind of in the gap area right now, right? We're in the gap area. Are we going to come back and fill yesterday's close, or are we going to push down towards this level or this level going into next week? I'd still like to see a bit more of a sell-off if possible. I think even if we do fill this gap, I think it still gets faded, and this market has rolled over a little bit, at least for a correction. But if we break, that trend line there, and we start clearing back above like 58.50, then the bulls might be right back in charge. Okay, so food for thought. All right, let's go some other top-down stuff here. Let's go gold and silver. So we've got S&P down about 0.9%, Nasdaq down just over 1%, Dow is down 0.7, Russell is around 201. My covered call thoughts working out just fine. I'll still sell more calls. I'll still collect the income. That is IWM, Tesla, MicroStrategy, and even SPY. I'm selling calls in SPY as well. I was looking at, I might actually do this in this. I just got a new account that started. I may end up buying some shares and looking at. I'm going to price this out right now. Actually, if I looked at like a 1 day for the SPY, so if I sold here, I don't really want to get in the money. If I sold like a 30 delta, so I get some income there. So if I sell a 30 delta for about $1.50, what's my delta if I wanted to pay for a debit? So what I'm looking at, is there a way that I'm just thinking about this yesterday on a walk. If I did like a 0 to 1 day collar trade, okay, and this is just kind of hypothetical chat here, but I'm going to kind of price this out and figure out if this is a good strategy to make some daily income. So if I buy 100 shares of the SPY as an example, right, and then 0 to 1 days to expiration, I play a collar trade, which is I sell a call at higher price and I buy a put at lower price. My goal would be to somehow produce about 50 to $1 credit per day. I'll say per trade. Okay. And I can just repeat this. Now, it's going to be a lot of management, but I'm going to kind of dedicate like one account to this and see if it would be worth it. So if I wanted to, like 30 delta, it's kind of that one standard deviation move. If I did it, I can generate a few bucks. Let me try to do like it's probably better to assess this like in the mornings. So like Tuesday morning next week for a 0 DT. But if I were to sell this for $1.40, and then I go down to kind of make around 50 bucks, like right there, I could buy a 17 delta put. I could sell a 30 delta call. I can pull in about $40 income. Okay. Now, on top of that, if price goes up, I mean, there's room for gains here. Like if I buy the shares at 577, here's how this trade works. If I buy the shares at 577.40, I collect, let's say 45 cents on this trade. Well, there's my break even. If price goes up to 583, I get it called away at 583. I make $600 today. Okay, that's a great trade. Also, if the market is moving lower, if I note this debit around 95 cents and the price drops today, can I turn a 95-cent debit into like a dollar, 80, maybe $2 and change of credit? So I think a 1-day expiration might be the way I consider pricing this out. I'm gonna experiment on one of my accounts with this. So I mean, the nice thing is it's covered either direction, right? Price goes up, I get the appreciation, I get income, right? I have price going up, I get it called away, no big deal. I'll just reset it, do another call trade. Price goes down, as long as I have at least 1-day expiration. If we have a nasty, nasty down day, that put should grow and swell in price, and I could lower my cost basis, and I just reposition the collar the next day. So anyway, food for thought, but it struck me, yesterday just on a walk. I'm like, I think I'm going to kind of play, because right now it's like, I don't know if this market's going to keep melting up higher or if we're going to have a pullback. I think it's going to be a noisy spot. Nobody really knows where we're going to go. I think all-time highs are in the cards for 2025. I think we can get there. But in the interim, it's like, I know I can jump into these markets, get my hands a little bit dirty in the trenches and grind. And even if it's like $50 a day, $50 a day, $50 a day, $100 a day. If I do a 1DT, so I trade it on a Monday, have a 1DT for Tuesday. Okay. And then for Tuesday, I take it for a Thursday. Thursday, I take it for the next week, Monday, perhaps. Point is if I'm managing the math like aggressively, I think that gives me some income opportunities every, like, basically 2 or 3 income opportunities every week. And I'd say on average, if I could generate, $50 to $100 on each one of those trades, making an extra $150 to $200, $300 a week, you do that over 50 weeks, it adds up a lot, right? So, I mean, I'll just be conservative and say I can make an extra $100 a week. Well, you do that over 52 weeks. That's not bad on just the income side. Now, if price gets called away with a big up move, then I take it and I reset it. But that's churning an extra, basically $52 of improving your price. So if I were to buy the SPY at 577 and through this course, lower my cost basis all the way down to 520, it's effectively doing the same thing. Or just kind of grind. And if we have like a nasty down day, I can turn that, little tiny inexpensive put into something very profitable and then lower my cost basis with it. So anyway, I'll marinate on that over the weekend, but this is something I'm looking to incorporate into some of my accounts just for a bit more of an income churn. Okay. Let's see here. Daniel, there you go, man. I mean, as always, dude, you grind like crazy. Back up now, done. Okay, that's a huge improvement. All right. Okay, let's see where the market wants to get us by the end of the day. I've got a broken wing butterfly that I'm in for it's a 58.45 pin price. So I'm going to put that in at 58.45 right there. As long as price stays below that today, I'll keep 95 cents. So I set the debit already. It's a 95-cent credit. I set the debit for 10 cents, I believe. Let me double check that here. Yes. So this 95-cent credit is trading for about 35 to 40 cents right now. I'm going to try to let this one go further down, 15 cents, 10 cents on the day. Watching also for another fill on a broken wing, try to get 75 cents for that one. But if price goes lower today, it's fine. We got a pretty good resistance level around 5,800. I'm hoping that we do not fill today's gap at 58.40. That was the close from yesterday. And if we do it and it's creeping up by the end of the day, I will be here end of day. I'll be doing my typical final hour YouTube session, and that's also a potential $5 profit trap. But I love and hate managing trades into the close like that, because all it takes is price to do something silly and squeeze up higher, and I only have about a $5 to $9 buffer on being like right or potentially taking on risk. So I don't love that. It would be easier for me to see price do this. If price goes down to fresh lows, then this 95-cent trade is going to be trading for probably 25 cents. So I'm willing to accept a 15 cent today. Grab $80 out of the morning, and I'm good with that. Okay. All right. Let's go some other charts and indexes. Qs, if we get a bigger gap fill, that trade that I took on the 111 this morning, if we get a bigger gap fill on the Qs, I'll probably do the same thing. If we pull back into this area here, okay, I would say between like 486 Qs or like 460 Qs, I'm going to look to see if I can put in a 111 trade that keeps me away from this low and trade the middle here with some income. Okay. I also might even consider dollar cost averaging where, I could do an option trade for some income, but if it comes in and fills this gap, I'll buy maybe $1,000 worth. If it comes a little bit lower, I'll buy $1,000 worth and then see if that, yields a little profit to the upside. And I might increase more. I think this is a good chunk to be like, well, I think we do get to all-time highs. But who knows? I think we'll get there, but you never know. All right, Russell, just going to sell some calls. This one has like the most resistance on the technical side. Volatility index today is up, right? I mean, that's a pretty decent spike. So just on the day, that's a big spike in volatility. It's faded, it's quickly reverting, but it doesn't mean we're going back to fresh lows. Like we might see some elevated volatility here for the next couple of weeks, which is fine. If we have pullbacks, it's okay. I'm actually happy to see some pullbacks. Now, I do wonder if this is causing a pop in the bond market. Okay, so TLT is up a little bit off yesterday's lows. Let's go to ZB for some bond futures. Yeah. I mean, maybe. Let me see here. Let me look at ZB. I might look at if it's cheap enough. If I did something in this would have to be like pretty good asymmetry. If I went out like 60 days and let's, buy the 110. It's a little bit more risk than I want. So I'm risking $2,100 to make $2,800 if I tighten this up a little bit. All right, so we got to go at the money. So that's 1-to-1. That's a little bit more asymmetry. A little bit more. Yeah, I mean, that's better. Maybe that. If I went out, 63 days, do we have a squeeze in the bond market going up 3 handles? I don't know, man. This bond market is kind of a tricky situation. I'm just going to say no. I'd rather just trade gold, trade silver, trade Bitcoin, use my option levels there versus trying to scalp bonds. I mean, honestly, maybe I'm a little bit more interested in bonds if we come down to these lows. If we come down to these lows here, then sure, maybe a bite in the bond futures. All right, let's go rates and yields. The 10-year yield, was down for a second. Now it's not. It's right back where we started. The 20-year yield. This, by the way, it spiked up above the Liberation Day flinch, right? Post Liberation Day, when this thing spiked up and had that big rip in the bond market, that's what caused the 90-day pause. We're up higher than that. So, I mean, I don't know if this is going to keep grinding higher. It might, be a bit of a fake out trade. I'm not sure. So it's just something to kind of watch. But we are seeing global yields rise, and that ultimately can't be a great thing. Okay, mortgage rates up to like this is I think Fannie Mae yesterday showed like a 6.9. We can go to Mortgage News Daily. 30-year. I mean, we have Mortgage News Daily now showing over 7%. Yikes. So Freddie Mac at 6.86, Fannie Mae around 6.86. Mortgage News Daily, this is the average 30-year over 7% again. Shame, shame, shame. Not cool, man. Let's go China. Nothing crazy here. Alibaba's okay. Baidu had earnings this week. I closed out Baidu for a small loss. I lost like $50 on Baidu. It actually had like a 2.5 times move during earnings, which was not what I planned for. Like, I think 11 out of 15 times it stays within the expected range. I ended up getting the lower probability trade. So I took the higher probability trade, but I got the losing side of it, but only lost $50. So it's fine. Still annoying. I thought we'd have a pretty good trade there. FXI, nothing yet. I still have some shares, looking to see if we get back to highs. JD at 33. I want to sell some more calls on this one to let it get called away. Schwab growth still looking pretty good. Schwab dividend pulling back. Let me go to SCHY. This is the non-US. Yep. So we're back up to 2021 highs on this instrument, but this is that potential, will the world outperform the US? If it does, this is a good way to trade it. Okay, let's look at market breadth, SDFI. No, S5. There it is. So stocks above the 50-day. We had a big reset here. So we were up around 80, almost 81% of stocks above the 50-day, and pull back to now 62%. Go to the how many stocks at the 200 moving average? Well, it was around 55%. It's pulled back. So I mentioned this yesterday in session. Does this mean that the 200 moving average on the broader market is acting as some level of resistance? If it is, then maybe there's some chop. There's some chop in here. Same thing on the Nasdaq. Nasdaq 50-day moving average, about 85% of stocks are above. It's fading a little bit. And then on the 200-day, we have 57% of stocks above the 200-day. So I wonder if this works its way back down below that 50% handle, showing yet again like maybe that 200-day moving average is kind of a range trade. Okay, anything here? Pulling back. Let me check Spotify. Gosh darn it, dude. I've got a double broken wing butterfly. I need it to stay below 670. It should be okay. But let me check the expected range really quickly since we had earnings. Spotify here. All right. So I have about a 60% chance that this trade still works out as of now. If price goes down a little bit, this will get hopefully better. The current P&L on Spotify is I'm down on the call side. I'm up on the put side. So, I mean, I guess I could technically close the put side out for some income here, but then I'm managing the call side with full risk. I still have a potential, $1,000 profit trap here. I just want to see if it stays less than 670 by expiration. So I'm going to have to give that one a little bit more time. Okay. All right. What else do we have today? Anything wild and crazy happening out there? People will be spending, but seeing some drops off these recent highs, it's not a huge surprise. Home Depot, Lowe's, I wouldn't mind picking some of these up if they're discounted. Nike hanging it off those lows, which I have some puts on. Walmart defensive enough, but just trying to sell some calls. Let's see here. Johnson & Johnson, looks like UNH. That was another kind of big dramatic stock, hanging out around 296. Closed out that 165 by 170. Now I'm looking to see if it'll stay above 270. I need it to stay above 260 actually. If we get a gap fill here, that'd be pretty nice. Progressive profits there. Palantir. I did a ratio spread on Palantir. I also did a trade on HIMS this week. I'll put this one up by Palantir since those were two of the bigger movers this year. Okay, so HIMS with a bit of a pullback. I put in a trade that, where's it at? Let me go stock options. Yep, so it's it's in my Pulver alert section at 26 by 25 for $1.48. 26 by 25 for $1.48. So as long as HIM stays above this level, it's $150. If it pulls back more, I might do the same thing. I might just sell some puts as well. I might actually do a put combo. Let me take a look at that one. I don't mind owning some shares. Let me take a look. HIMS. If I went out to the end of them, let's go December 19. So the problem here is I look at the strikes. I can't get any more strikes. That's kind of crappy. So that's why I went to January for the trade that I did, because I can go to the strikes that I want. Now, I wouldn't mind something like this if I just wanted to stack up some puts, a 22, 21, and a 20. That's $400 of income, which isn't bad. I mean, it's what is that? That'd be my max risk, but on buying power, that's about 40% on buying power, which isn't terrible. The stock would have to go to 0 for me to take like really this loss. Probability of profit is about 84%, which I think is surprisingly low to go that far, but it just shows like it's a volatile stock. IV rank is still 51, so it's a volatile stock. That's why they just throw a bunch of puts in. Ratio spread, okay. I've got a a 3/6 ratio spread, so I'm willing to still own 300 shares, but I've got a profit trap to help lower the cost. So I'll be watching those since they're kind of high flyers and high volatility. Carvana, I'm staying out of this one. Whatever. I sold a couple of cars in back in the day on Carvana. It was actually kind of cool. I bought the shares when it was, probably looking like this company is never going to amount to anything. But the head and shoulder symmetry was all I took it to. So unfortunately, I didn't get the the 1,000+% runner. That was, I mean, just insane, right? That's it. O'Reilly, choppy, Redfin, Zillow, anything real estate wise. Let me check some home builders. Yeah, I think home builders pull back a little bit more. I hope that they do actually. Lennar, Toll Brothers, and then DHI. These are all like major home builders in the US. Uber, bit of a pullback. Took profit on that ratio spread. Lyft. See if we can get a Lyft to jump up here towards like 18, 19 bucks. And then currency wise, again, just real quick on the currency strength. Here's today's price action. So New Zealand up, Japanese yen back to baseline. Swiss has been in the middle. It's like everything is like pretty quiet, and the dollar just got a lot weaker from around 8 p.m. last night all the way to current. Like dollar's just weaker. So again, dollar index. Just saying, like I wouldn't be surprised if we retest the lows. Okay, but it's a potential bear trap in the making. If we go lower on the dollar, watch out for a bear trap because I can see us pulling back again. Okay. I think there's some levels to fade. You want to fade the dollar, small areas, or obviously wait for confirmation. Bigger picture. I mean, I don't know. I don't know if this is the the time is now. It's like the dollar reign is over. But I look. This is one thing you need to think about. There's clearly an emotional move away from the dollar right now, where it's like, nobody likes how the U.S. is treating the world. We're putting on tariffs, so we're bullying the world right now and flexing our muscles. And it's like, you want to do business with the U.S. Here, you do it. Here's how you do it. Pay us, right? It's like if we're the the Costco of the world, you've got to now pay a membership fee to do business with us. Okay, fine. How that's being rolled out has probably not been the smoothest. But I don't know what the alternative is. I mean, is everybody going to line up and say, okay, Eurozone, you're next. No more dollar. Everything's about the Eurozone. I mean, the Eurozone has never been thought of as like a safe haven, right? It's a Eurozone that's trying not to break up. Germany's footed the bill for most of the last 20 years. UK is split. I mean, UK is now separate, but I mean, I don't see the world backing up behind China. I don't think the world is going to back up behind just a currency, especially not a fiat currency. So, I mean, the alternative might be some type of parallel system where you have, dollar denominated assets that are starting to migrate into, commodity based assets. Maybe things are going to get priced in gold. Maybe things get priced in oil. I'm not really sure, but that would, to me, seem the most logical. It's just, I don't think that happens overnight. So, but my point is, is the dollar just going to get smashed all the way down to 90? Well, here's an easy way to tell. If we hit symmetry, okay, if we go down here to symmetry and we have a bit of a pullback here, this past support to become resistance again, that would be a good trade to me. So if we can sell resistance, target support, high, low, lower high, lower low, lower high, lower low, to me, I can get around that trade. That makes sense? So, I mean, we still have a technical setup on like, yeah, I can see the dollar coming into the low 90s, but I don't really want to trade the bottom. I don't want to trade at the lows right now. My way to express that, like I said, I'm long euro dollar. If we hit 1500, that's great. 1550, that's great. But then I think we have some noise around this handle. If we stay below the 102 handle, I think this continues to be like pressure mounts on the dollar, lower highs and lower lows, potentially coming back into this 90 handle. But the good thing is there's lots of time and there's lots of opportunity with confirmation to focus on that trade. If the dollar yen breaks 140, there's lots of time, there's lots of abilities to focus on that trade dropping from 140 down to 120. Okay. So it just doesn't have to be like, I need to trade it now. It's like, this might take months to set up. This might give you a lot of good opportunities just to wait it out. But anyway, just be aware of the big levels. Okay. All right. So we did gold. Actually, we didn't do gold. Here's gold today. Gold, I mean, come on, dude. That's it. A 50 period moving average. Well, maybe this still holds. If it doesn't, I mean, I still like the bar count. I still think this is maybe a range. Here's what I like. Here's what I'd like to see on gold. If we hit this resistance and we fall back down, okay, fine. If the markets drop a little bit, gold becomes more of that safe haven bid. I'd like to see another pullback. Okay, where to? Anything in here as these moving averages catch up, I would say I'm willing to position for my GLD position, maybe even a 111 in gold futures. Okay, I don't mind that trade. I still like silver better, but I can't justify buying gold at these highs. I know we can still go higher, right? I know we could capitulate more. I mean, maybe we get to 3,800. Maybe do that before we hit the 200 moving average. I'd like to have a chance to buy low and then take it up to that level. Silver, if we get back above 35, I did put on some trades this week. I bought some silver. I put a buy limit in here, and I put in a buy limit here. So I bought it at market, and if we break the highs, I think we got a lot of upside. If we get a level 2 that I'm interested in, so level 1, level 2, level 3. So I like silver a lot. It's just this isn't the trade where I buy it here, stop out. It's like I'm going to say invest, invest, invest. And bigger picture is $45 to $50 silver. That's my big target. Let's see if we get there. Okay, Bitcoin due for a pullback. I hope we get one. You know, we did poke the highs. It's encouraging, but a little pullback, a little bit of this, you know, backfill, or even this backfill, but a dollar cost average into a little bit more. Okay, so we'll watch. If we break and go to all-time highs, I mean, or like, you know, we keep pushing higher. Okay, I still think we get pullbacks in this area just based on the technical inefficiencies, right? This was the last big inefficiency we had on Bitcoin, and it found it. So I see this one and I see this one as the same thing. I'd rather find them now and go higher from there versus go higher first and then come back in and find them later. And then we just have like a big trend, right? With like deep pullbacks. So just say, I don't know, just keep an eye on it. So I'm not chasing highs on Bitcoin, but I'm holding from all these levels back here. Still holding Bitcoin. When IBIT came into the mix, added some exposure, and you know, I've got projected levels around 130. I think momentum and kind of the rally could get us to 145 to 150. You know, the next big level for me is about that 130 to 150 zone. Okay, if we can accumulate more, that'd be nice. All right. Any other charts? Any questions? Any requests before my voice is gone? We did a little bit of everything top down. So currency wise, watching the dollar, watching the yens. I still like my Aussie CAD, New Zealand CAD. I'm still holding my Swiss crosses. Watch that 140 floor on the dollar yen. Stock wise today, we are in the middle between two gaps, right? We have the US China trade gap right in here, and we have today's, you know, gap to the upside if we're going to fill, but I would hope it just kind of stays in the middle, right? We stay in the middle. And then next week on Monday, do we break and go lower? Do we try to fill this gap? I think the Bears might have a bit more control. I mean, unless all of a sudden there's a complete flip-flop of today it's 50% tariffs on Eurozone, and then Monday's a holiday, Tuesday is, it's going to be like 15%. You know, I mean, again, I also think that if we keep doing that, I think we start losing a lot more credibility, because then nobody's going to believe it, right? We say 50%, but in truth, you know, it's like, oh, what's the real number? You know, and it just keeps being modified until it's like, do a deal with us. So I don't know. But obviously we haven't seen a lot of tariff drama, and then today it just came out again swinging. So it's not going away. Dollar CAD, that's a request from JRC. Yeah, I don't have a trade. I mean, dollar CAD, if you're liking the short, this isn't a bad spot with a stop above that swing high. Not my personal spot though. I'd rather wait for this to come back down to these lows and then look to average back in. I want to buy low around 33 to 3,000 and take it back to the halfway point or maybe back up to these highs. So if that's the trade I get on dollar CAD, that's what I'd wait for. I'd buy it nice and low, look for a bottoming pattern, and take it back to this. This is just very consistent resistance around like 38, 3,900. So if I could buy it at 33, 32, 31, and 3,000, take it all the way back to 3,800, that's another position trade. That's what we did here, right? Bought it here, tested resistance, and then stacked up buy stop levels as it broke and went higher. So if I can buy low, I'll stack up trades into that resistance and try to make that into a big trade as well. Hope that helps. Okay, so I think that's going to do it for me today. Let's do this again next week. Enjoy the weekend. No markets on Monday with Memorial Day. I'll be in Chicago this weekend, so be back hopefully Sunday night if I can find a flight, or Monday. And have a fantastic weekend, everybody. All right. Thanks. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.